Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian ruble. The commonly accepted principle in economics is that if your economy is doing well, then generally speaking, your currency will be in demand and therefore will be rising in value. However, if your economy isn't doing well, then the opposite is true. Your currency won't be in demand and therefore it will diminish in value. And over the last 18 months, we have seen a significant fall in the value of the Russian ruble. And that's despite the fact that President Putin introduced capital controls around October time to try to limit the fall in the value of the ruble. Now, whenever I post a video about the ruble, I'm always inundated with comments in the section below from people saying that I'm talking absolute nonsense and that the ruble is actually one of the best performing currencies in the world. So in today's video, we're going to have a look at some independent analysis that's been undertaken by visualcapitalist.com that compares all of the major currencies in the world for 2023. So we'll have a look at exactly how the Russian ruble fared against all of the big currencies. We'll then go on to have a detailed look as to how the ruble is performing right now against the US dollar, the euro, the Chinese yuan, the Indian rupee. We'll then talk about what the impact of a reduction in the value of your currency has on both exports and imports, because that's really important for Russia right now. Obviously, the economy is totally dependent on exports, predominantly of oil and gas, but Russia is also highly dependent on imports. And then finally today, I'll wrap up with my summary. So what I think has been happening to the value of the ruble over the last 18 months, what the implications of that are for the Russian economy, and what's likely to happen over the course of the next 6 to 12 months. But before we get started on all of that, once again, I'd like to say thank you so much to everybody that's been sending me messages about the recent passing of my father, and also for everyone that's been supporting the channel. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member, thank you so much. Really appreciate your support. This graphic provided by visualcapitalist.com compares the performance of the major currencies in the world in 2023. And if we start off right at the top, you can see that the US dollar index, which plots the performance of the US dollar, fell by 2%. 2022 was one of the strongest performing years for the US dollar. However, in 2023, as the global economy started to slow down, the performance of the dollar weakened and actually fell by 2% year on year. If we now move on to have a look at which were the best performing currencies, which are shown in green on the right hand side of this chart, you can see that the best performing major currency was the Mexican peso, which increased in value by 14.8% against the US dollar. The second best performing currency was the Swiss franc, which increased by 9.8%, followed by the British pound, increasing by 5.3%, the euro, which saw 3.2% growth, and the Canadian dollar, which increased by 2.3%. If we now move on to look at which currencies reduced in value against the US dollar, the Australian dollar saw a fractional fall of 0.1%, the Indian rupee and the New Zealand dollar both fell by 0.5%, the Chinese yuan was down by 2.8%, the Japanese yen fell by 7%, and the Russian ruble fell by a whopping 17.5%. However, it wasn't the worst performing major currency. That accolade went to the Turkish lira, which was down by almost 37% year on year. So as I said at the start of today's video, I wanted to provide you with some independent analysis. And as we've just seen, the Russian ruble fell officially by 17.5% in 2023. And you might be thinking, well, is 17.5% that bad? And I have to say, it is that bad, because in economic terms, movements in exchange rates are usually relatively small. We're talking about 1 or 2 or 3% per year being the normal movements. When you've got a fall of 17.5%, that equates to a crash. Either you've had a huge appreciation of one currency, such as the dollar, but as we talked about, the dollar actually fell year on year by 2%, so that simply wasn't the case. Or we've had a major collapse as a result of other factors. And clearly here, we're talking about all of the sanctions that were applied against Russia, meaning that there was a huge drop in the demand for the Russian ruble, and therefore it led to a major fall. But actually, the situation with regards to the movement in the ruble is much, much worse than the 17.5% that we've just looked at. This chart plots the movement in the exchange rate between the US dollar and the Russian ruble over the last 5 years. And in order to evaluate the impact of Russia's invasion of Ukraine on the value of the ruble, I wanted to start off by looking at the exchange rate at the end of December 2021, which was around 2 months before the invasion started. And as you can see, at that point, one US dollar was trading for around 75 rubles. And that level was broadly where the exchange rate had been sitting since the middle of 2020. However, immediately following Russia's invasion of Ukraine, the value of the ruble collapsed to around 125 to one US dollar. The Russian central bank then introduced a variety of measures aimed at supporting the value of the ruble, and as a direct result of that, the value strengthened significantly. And by July 2022, one US dollar was trading for 50 Russian rubles. However, between July and December 2022, the value of the ruble fell significantly, and by the end of 2022, one US dollar was trading for 72 rubles, representing a fall of more than 30% in a 6-month period. And this fall in value is important because the 17.5% that we've just talked about that occurred in 2023 was after the 30% fall in the second half of 2022. And the combined impact of those two falls means that the Russian ruble over the 18-month period fell by more than 44%, which would have actually put it as the worst performing currency in the world, worse than the Turkish lira. So I think it's fair to say that over the last 18 months, the Russian ruble has been one of the worst performing currencies globally. However, the situation is actually worse than that because President Putin introduced a variety of capital controls in October 2023 to try to arrest the decline of the ruble. On the 2nd of October 2023, the value of the Russian ruble once again fell below 100 against the US dollar. And the breach of that notional level was too much for President Putin, and he introduced a variety of controls, which basically meant that companies in Russia that were being paid in foreign currency were obliged to convert that currency into Russian rubles. And as you can see, the introduction of those measures, combined with the fact that the market for Russian rubles is now very small and therefore much easier for the Russian central bank to control, led to an increase in the value of the ruble to its current level of around $1 to 88 Russian rubles. However, if you take a step back and have a look at the trend between July 22 and October 2023, if those capital controls had not been introduced, the value of the ruble today, if it had continued falling at the same rate, would have been somewhere in the region of $1 to 120 rubles. And I think that really puts into perspective how this currency is currently being controlled and what the true value of the ruble would be if it was a free market float. Now, one of the other points that is continually raised by people who don't believe that the value of the ruble has fallen over the last 18 months is that it's irrelevant looking at the exchange rate between the ruble and the US dollar because Russia no longer does any business with the USA and doesn't want to deal in dollars. And as Russia's main trading partner today is China, the most relevant exchange rate is the Russian ruble to the Chinese yuan. This chart shows the movement in the exchange rate between the Chinese yuan and the Russian ruble over the last 5 years. And as you can see, the shape of this chart is virtually identical to the shape of the chart that we just saw for the American dollar. The value of the ruble against the yuan crashed immediately following Russia's invasion of Ukraine. It then recovered when the Russian central bank stepped into the markets. But since July 2022, there has been a significant deterioration in the value of the ruble. At the beginning of July 2022, one Chinese yuan was trading for 7.4 Russian rubles. However, by the start of October 2023, one yuan was trading for 13.5 Russian rubles, which represents a fall in the value of the ruble of more than 45% over that 15-month period. Now, as you can see, over the last few months, the value of the ruble has recovered slightly as a result of the capital controls that were brought in relating to all foreign currencies, not just the US dollar. However, the exchange rate for the Chinese yuan today of around 12.2 Russian rubles represents a fall in value against the yuan of more than 39% over the last 18 months. Since the start of Russia's invasion of Ukraine, Russia's trade with India has increased significantly. So the exchange rate between the Russian ruble and the Indian rupee is now an important part of the Russian economy. So let's have a look at exactly what's been happening to that exchange rate. This chart plots the exchange rate of the Indian rupee and the Russian ruble over the last 5 years. And once again, you can see here that the shape of this chart is identical to what we've just looked at for the Chinese yuan and the US dollar. So what we're seeing here is a clear pattern of the devaluation of the Russian ruble against all of the major currencies over the last 18 months. And the movement in the value of the ruble against the Indian rupee is one of the most interesting, because at the start of July 2023, the Russian ruble was actually stronger than the Indian rupee. When we're talking about exchange rates, usually we quote the strongest currency first. So in the example we looked at with the US dollar, $1 was trading for around 88 Russian rubles. So that's why we quote the dollar first. Now back in July 2023, 1 Indian rupee was trading for 0.6 Russian rubles. So the ruble was stronger. However, over the last 18 months, that situation has changed. By the start of October 2023, 1 Indian rupee was trading for 1.22 Russian rubles, and that movement in the exchange rate represents a fall in the value of the ruble of almost 51% over that 15-month period. Now, over the last few months, the value of the ruble has increased as a result of the capital controls that have been introduced. However, the current exchange rate of 1 Indian rupee to 1.06 Russian rubles represents a fall in value over the last 18 months of more than 43%. This chart shows the movement in the exchange rate between the euro and the Russian ruble over the last 5 years. And as you can see, the shape of this chart is identical to what we saw for the exchange rate with the US dollar. There was a huge fall in the value of the ruble immediately following Russia's invasion of Ukraine. That fall recovered significantly as a result of the central bank buying rubles and supporting the value. However, over the last 18 months, there's been a significant decline in the value of the ruble. At the start of July 2022, €1 was trading for around 54 rubles. However, by the start of October 2023, €1 was trading for around 107 Russian rubles, which represents a fall in value of more than 49% over that 15-month period. And even if we take into account the increase in the value of the ruble seen over the last few months as a result of the capital controls introduced in Russia, the current exchange rate of around €1 to 96 rubles represents a fall in value of more than 43% over the last 18 months. So what implications does the fall in the value of the Russian ruble have for the Russian economy? Well, generally speaking, if your currency is falling in value, that can actually be beneficial in terms of your exports. Because if you're pricing all of your exports in your home currency, and your home currency is going down in terms of its price, then that will mean that the price of the goods that you're exporting should also be falling in relative terms for all of the other countries around the world and make them more attractive. That's the theory. But the problem from Russia's point of view is that that doesn't really apply to what's going on in Russia right now for a couple of reasons. Firstly, the buyers of Russia's exports are not paying in rubles. China and India are now the two biggest purchasers of Russian oil, and both countries have refused to pay in rubles. China will only pay in Chinese yuan, and India will not pay in Russian rubles. Initially, they wanted to pay in Indian rupees. However, the Russian authorities refused that. And as I talked about in a recent video, they've recently started paying in either Chinese yuan or dirhams from the United Arab Emirates, which are actually linked to the value of the US dollar. So Russia isn't being paid in rubles, and therefore the value of the ruble doesn't have such a big bearing on the price of the oil that Russia is charging, because it's not charging in its home currency. Also, the other factor at play here is that Russia is still having to offer a discount to countries like China and India to encourage them to take large volumes compared to providers from the rest of the world. So what's going on with the ruble isn't directly impacting on the price of Russian oil and gas. So the usual economic principle of a fall in the value of your currency potentially being beneficial for your exports doesn't apply to Russia's current situation. Now, if we talk about what's going on with regards to imports, the value of your currency does have a direct relationship to the cost of your imports. When the value of your currency falls, it means that imports become relatively more expensive because you're having to trade a higher amount of your currency for the foreign currency that you need to be able to buy those imports. And Russia is still dependent on imports for a variety of different things. It is not self-sufficient. So the fall in the value of the ruble over the last 18 months means that all of the imports are now becoming more expensive. And the evidence of this can be seen with what's going on with inflation in Russia. This chart shows the movement in the rate of inflation in Russia over the last 12 months. And as you can see, since April 2023, inflation has been progressively increasing, and the current rate of 7.4% recorded in December 2023 is almost double the target rate of 4% set by the Bank of Russia. Now, as with any bar chart, we are always looking at the trends. And between April and November, there was a consistent increase in inflation. However, in December, you can see that inflation fell marginally by 0.1% from 7.5% to 7.4%. So that might indicate that things are starting to get better. However, to take into account the impact on the economy, we need to have a look at what's going on with interest rates. And this chart shows the movement in the official rate of interest in Russia over the last 5 years. And you can see that over the last 6 months, there has been a rapid increase in interest rates from 7.5% to the current level of 16%. And 16% as the official rate of interest is incredibly high. That means that any companies or individuals that are borrowing in Russia and don't have a fixed rate of interest are now having to pay more than double their interest costs that they were paying 6 months ago. And that is a disaster from an economic point of view. That will lead to huge cash flow pressure and a potential reduction in investments at a time when Russia desperately needs all companies to be reinvesting into the future and trying to grow. So the impact of the higher rates of inflation, which are partially caused by the collapse in the value of the ruble, have led to higher interest rates, which are now starting to hurt the economy. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with the value of the Russian ruble is really important because it gives us a strong steer as to what's actually going on in the Russian economy. As we've talked about in lots of other videos, the level of data being released by Russia is extremely limited. We don't have a clear and concise view as to what's actually going on in the economy. So monitoring what's going on with the value of the ruble is really important. And as we saw from the data provided by Visual Capitalist, during 2023, the value of the ruble against the US dollar fell by 17.5%. That is a huge fall. That is definitely described as a crash in anybody's terminology. But when you take a step back from that 12-month period and look at what's been happening since the middle of 2022, the fall is significantly worse than that, somewhere in the region of 40 to 50% over that period. And this isn't just restricted to the US dollar. As we've seen from today's data, the Russian ruble has fallen against all of the major currencies, the Chinese yuan and the Indian rupee being the two most important from Russia's point of view right now because they're the two countries that they're doing the most trade with. And the reason that the Russian ruble has fallen so significantly over that period is because the Russian economy is weakening. It's having to give away its exports at a much lower cost than it did historically. The discounts that have been applied on oil and gas are hurting the Russian economy. Russia is in a very weak position in terms of negotiating price and deals. And that's why countries like China and India have refused to pay in Russian rubles. At the start of this conflict, President Putin was trying to establish the ruble as the new petrocurrency. He was trying to force countries from the West to pay in rubles for things like gas, and he was also demanding payments in rubles from China and India. However, both of those countries knew that Russia needed them to buy that oil. They had the balance of power, and as a result of that, they refused to pay in rubles, and the value of the ruble continued to fall. And the situation that we've got today is that the market for the Russian ruble is now extremely small. There are very few countries in the world that are doing any trade in rubles at all. It's becoming a bit of a dead currency, and Russia is now building up huge supplies of things like Chinese yuan and UAE dirhams because it's receiving all of its payments for oil in those currencies, but it doesn't have anything to do with them. It can't use them at home, and so really all it can do is more trade with China. Now, in terms of evaluating the impact of the fall of the ruble on the Russian economy, as we've talked about, theoretically, the fall in the value could have been beneficial for Russia's exports. It might have made those exports cheaper and therefore increased the volume of oil and gas that Russia was selling. However, because of the sanctions and also the fact that nobody's actually paying Russia in rubles, that hasn't been the situation. And Russia is still struggling to be able to get enough deals to secure all of its income. But from an imports point of view, the fall in the value of the ruble has had a hugely negative impact on the Russian economy because it's increased the price of all of those imports. That's now driving up inflation. As a result of that higher level of inflation, the Russian central bank has hiked interest rates to 16%, which is one of the highest levels of all of the developed countries in the world. And that will have a hugely negative impact on the Russian economy because all of the businesses and individuals in Russia that have debt are now paying a lot more for that. It's discouraging people from taking on any new debt, so companies won't be taking on debt to try to grow and expand, and both of those factors will lead to a contraction in the Russian economy. So once again, we're seeing a negative impact of the fall of the value of the ruble on Russia overall. So the overall summary of today's video is that over the last 18 months, the value of the ruble has fallen significantly, not just against the US dollar, but against all of the major currencies. That situation isn't really changing. The market for Russian rubles is contracting, so it's becoming less relevant on a global context. And the negative impact on imports is really starting to hurt the Russian economy. So hopefully the data that I've shared with you in today's video gives you a good understanding as to what's going on with the ruble and will minimize the number of comments that I get in the section below from people saying, "What are you talking about? The Russian ruble is actually the best performing currency in the world." As we've seen today, it's one of the worst. Hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.